The following is an excerpt taken from the Phil Mikan Radio Show, recorded in July 2021.
This is the Phil Mikan Show. Everybody out there, welcome. I have somebody we haven't talked to for a while, Mark Valenti, who talking about Rameses Capital.
Right.
That's an investment group that you have put together with a few other people.
Yes, and we look for multifamily property, and I've been doing videos to explain to people what it takes to buy, larger multifamily properties, actually anywhere from 20 to 400 units, and if you have to bring investors in, you do a syndication. Which is basically a way of organizing an investment to bring in people who are interested in investing in real estate, but they want to be passive. They don't want to have to deal with the day-to-day operation.
So they just want to put money in.
Right. So they're basically investors.
I put money in, send me my quarterly check or
Exactly.
whatever.
Exactly. We try to work it out so that it's a reasonable return. And, when we go after property and make offers, we make offers that we know are going to work for everybody. And I decided, it's time for me to take another step up. And that is, I decided to form an organization that goes after larger multifamily properties, and we're looking at syndicating. So we would go in and make offers and have investors come in.
So you're talking about properties that are multi-million dollars.
Oh, absolutely.
You're not talking about doing two tenement houses that have 12 units.
No. I mean, it could be, but you wouldn't need many investors.
But I'm saying you're talking about a large scale operation of multi-million dollars.
Yeah, we're talking about bringing investors in at probably the lowest end would be $25,000 a person, and depending on the size of the property, it might require $100,000 per person investment.
Okay, so you're talking people who can afford to make that kind of investment. But you're also talking about property, and you're primarily saying that you're looking for property down south, North Carolina, South Carolina, Florida, things like that.
Yep.
And is there any particular reason that you selected those areas? Is it because of the weather primarily?
No, we've actually chosen these areas because we've looked at demographics. Are people moving in? Are there job increases? Is there a lack of housing in these areas? And the answers are all positive. So, we wouldn't go somewhere where there was 15% unemployment and
so you're seeing growth.
Vacancy, right.
The growth not only in terms of people moving in, but there's a job factor. They're employable, like that.
Right, and probably also lack of enough housing. So your vacancy rates are not going to be very high. And you're going to be able to fill vacancies fairly easily. So, there are pockets in the area. And we've also found that very large investors, they all seem to want the southeast part of the United States as investments.
It makes sense to me. It's the climate, I think, has a lot to do with it, the growth. And to see that happen, I mean, that's kind of spooky. But Florida and South Carolina and North Carolina, Georgia's going to happen.
Georgia, too. Yeah. Yep.
So it's interesting that you see that growth factor, and not only the growth factor, but is this something that is traditional in your investment areas where people just go for investment and they don't want to get dirty hands?
Yes. You do find investors that will manage property themselves, but the hands-on type of guy, but not so much with the larger complexes. You're going to need a property manager or start a property management company and have employees. And these people that we're talking about that come in and invest, they don't want to deal with the day-to-day stuff, and they're looking for syndicators that will take an investment and provide them with a very, very nice return. We've been trying to look for places that has some what we would call value add to it, where we could go in and we know that the rents that are being charged are below market, or there's certain repairs that we can do that would allow us to raise the rents and attract tenants to the building. So those are things that improve the property, improve the value of the property. So you're getting more cash flow out of it, and in the event you decide to sell in 5 to 7 years, you've had good appreciation, and your investors are happy and are willing to come by and invest again.
This is the Phil Mikan Show. We're talking with Mark Valenti, who is a principal in Rameses Capital, and he's talking about getting people to invest pieces of property that you basically can get a paycheck from on a quarterly basis as an investor. And why, how, when, where. How do you solicit people that are interested or might be interested in this kind of investment? Do you put out a flyer? Do you put an ad in the paper? I mean, well, nobody puts an ad in the paper anymore. Those days seem to be gone. Do a Facebook solicitation? I mean, what do you do?
You have to be really careful about how you handle looking for investors. It's controlled by the Securities and Exchange Commission, and they have what they call Section 506B and 506C. On one section, 506C, you can advertise, but the problem with that is you are only allowed to have certain types of investors. They have to be what we call accredited investors. So if you advertise,
they have to prove that they can do this.
Yes, and the bottom line is they have to make at least $200,000 a year for the last 2 years and show that they are more likely than not to do that again in the current year, or have a net worth of $1 million, not counting personal residence. So if you advertise, you can openly advertise, but those are the only types of investors that you can have. That's under 506C. Under 506B, you can have both accredited and what we call sophisticated investors. So, you may have somebody who is very adept in finances, but they don't make that kind of money, nor do they have those assets, net worth, but they are sophisticated enough to know what they're doing, and you can have them as an investor. There's a limit to the number of investors like that you can have, but you also are not able to advertise if you accept investors like that. So you have to be really careful with the SEC. And, I've also, some of the videos I've done where I've explained things about me or the types of things we're looking for, and we talk about not specific returns on investments. I usually will say I am not soliciting anyone for an investment right now. I'm not looking for you to invest. I'm not talking about that, and I'm saying it right now on this show.
Yeah, this is just an educational kind of.
Right.
Okay. How do I get accredited? Do I have to provide? Do you accredit me? Is there an accrediting agency that accredits me, or is it simply showing you my tax returns of what I made last year, investment assets, whatever?
Generally, if I'm going to do a syndication and only have accredited investors, I'm going to have a third party like a CPA or an attorney or a firm that specializes in this verify that the individuals coming in are accredited. They have to prove it to the people that are third parties before they can get involved in the investment. And under the 506B, you could accept some information directly without a third party verifying, but for lack of a better way of explaining it, don't do that. Always get a third party to verify an accredited investor, and it saves you a lot of possible anguish in the long run should something happen.
Who monitors you to see if you're doing this accrediting?
The
process?
SEC can call in anything they want and look at
Look at
records,
look at your files, what
Yep,
you're doing.
Absolutely. And of course, if you get a complaint, they'll be knocking at your door.
So as a business that is doing this, can they just come and audit you?
I believe they can.
Knock on a door and say, we want to see what
Yep.
you're doing, or who you are, or who your principals are. So you're basically scrutinized publicly, and what you're doing is open to the public
Right.
purview.
Right. And they actually, when you look at a syndication, it really fits the definition of a security.
That's what it sounds like.
Yeah, it does fit the definition of a
It's kind of
security.
interesting that you're going in that direction.
It doesn't have to be a stock certificate, but a syndication fits the definition of a security.
So there's a big difference to this, and you and six guys getting together, deciding to put in $500,000 or $1 million and look for some property to flip.
Yeah. Now, you bring up an interesting point, though, because there's a significant difference between a syndication and what you're talking about is more like a joint venture.
Yeah.
But in a joint venture, what's so different is everybody has to bring something to the table. You have to be active in a joint venture. Syndication, you're a passive investor. A joint venture, you may come in and be an architect to design something where we're going to build. I may come in and do the accounting for it. Some other guy comes in and he brings funds to the table, and we're all active. We have regular meetings on how we're going to handle the investment. That's a joint venture. So it is different.
In terms of this kind of capital group, can you have subsets? I mean, can you go and have people you have several properties going, or is it the same group? Or
oh no, you could syndicate like here. I've got 200 units. Let's say in Hartford.
Okay, so this is the Alpha Group.
And then I do another syndication in Stamford. Okay. I could have different investors in that. Totally different.
Okay.
Totally different.
So it all comes under your umbrella.
It would, yeah.
All right. So it's an actual investment with risk. I mean, this is not
Absolutely.
risk-free.
Absolutely. And there is specific wording that's required when doing something like this that the SEC requires you to have, which involves, very strong language about this investment is a risk. There's no guarantee that there will be success. I mean, if you read all the language,
you wouldn't do it.
You'd be depressed. It's so depressing.
Yeah.
Yeah,
you got to lay out all of the bad stuff. And if there's a fire and whatever. Yes. You have to do full disclosure in terms of what you're dealing with. Are there any limits? Is this open-ended? Is there a time, or is this all subject per contract to what people want in it?
Yeah, there's no.
So every contract has different formulas.
There's no limits.
Mark Valenti has been around a long time. He's been in the real estate business for a number of years, for decades, but he's also been in upper management and in high capital investment companies for a number of years before that. So this isn't just something that he's doing in real estate. We're going to be right back. We're going on break. This is the Phil Mikan Show. We'll be right back. This is the Phil Mikan Show. We're back. So the things that you're putting together, for those of you just joining us, we're talking with Mark Valenti from Rameses Capital. It's a group, they syndicate, trying to syndicate for multiple families. They focus on property in Florida, North Carolina, South Carolina, investment property. What's the motivation on this for investors? Can they sit there and grow a number of projects? Can they, what would motivate me to come in and do this? Other than my avarice.
Generally, we're going to look for a property that has a lot of upside, both in increasing rents, which gives you helps fund your return, as well as an appreciated value. So, we may buy a property.
So you're looking for equity expansion as well.
Yeah. So we might buy a property, and our plan is to hold it for 5 or 7 years and then turn it over. So let's say we buy a property that we buy for $10 million today. We're able to raise the rents, reduce expenses. It's got great cash flow coming in. And in 5 years, we might be able to sell it for $15 million. So part of that profit goes back to the investors, in addition to the rates that 7 or 8% that we gave them during the time period we were holding it. They could participate in the profit as well. So, that's a really good upside of what we do. And, there's something, and we don't have a lot of time to go into this now, and it could be mind-boggling, but there's something called a cap rate. Multifamily properties, that's basically 5 units or more, are more determined value by something called a cap rate. And the cap rate is dependent on where you are. So in other words, in Stamford or Greenwich, the cap rate on apartment complexes might be 4 or 5, where if we went somewhere that was not as affluent, you might have, let's say New Britain, a cap rate of 9 or 10.
What does that mean?
It basically is a 10% return on the investment. You take.
They guarantee?
No guarantees, but it's determined by the areas. If I went in somewhere to get a loan,
Yep.
whether it's a lender or an insurance company that lends on this stuff, what they'll do is they'll look at the property and see if that property is operating at a positive level, and based on how that property is operating, they may or may not lend to me on that property. So it's all based on the property itself, not me as an individual or anyone else I'm in business with. So, what they look at is they'll look at what I just said is the net operating income, and they have what they call a debt coverage ratio, debt coverage service ratio that they look at. And if it's anywhere over 1.2 or 1.25 or higher, there's a good chance you're going to get the loan, because they want to make sure that what you are bringing in more than covers what you will have to pay in a mortgage.
The programs that you put in, how do the investors monitor the success of the investment? Do they get quarterly reports,
yes.
Monthly reports?
Yeah, generally it's going to be quarterly reports, and generally also most syndicators will have some kind of a portal that you can go online
Website,
and go.
whatever.
Yeah, you go online and you can look at the investment and see how it's doing. Look at financial data. And it's restricted to those individuals who have invested.
So you can, on a daily or weekly or whatever basis, take a look to see
yes.
how it's going.
Right. You have been listening to portions of the Phil Mikan radio show recorded in July 2021.